The Headwater Swordsman here. It's January the 26th, 2023. First video in a few days. First of all, markets pretty chaotic. At one point it was crashing and everybody was freaking out on Twitter basically. Juniors took a hit as well. And then all of that down action got made back, and basically the stock indices opened higher. I think maybe Nasdaq went back to square, but I mean, again, it's like volatility here. Everybody gets the doom sensation. It's like myself. You start to immediately price in. What if this is the start of the crash? Because again, what we fear the most is something we own going down in price tomorrow. That's a primal fear. Having less tomorrow on paper, that is the primal fear. Everybody typically gets affected by it. Especially if you actually watch the charts. Somebody who just looked at market caps and had the company presentations, etc. Sure, he could see a trend in price. No, let's say watch the market caps, the price, one time a day. Sure, but he wouldn't see necessarily this kind of trend in his mind vision, and he probably wouldn't, or hopefully wouldn't, be on Twitter, etc., where everybody's doing the exact same things, like guessing where the price is going to be tomorrow, what the weather is going to be tomorrow, and everybody guesses that the weather will be like it was today. So if it's a down day, you assume it's going to be down the next, etc., etc. And it's just almost funny to just watch how, especially the silver price acts. Anyway, gold and silver, yeah, they were down and then up. It's like playing Pong, basically. Funny part is like, yeah, it sure doesn't feel like it, but gold is at almost 1950. Gold is almost at the all-time highs. You would not guess that if you looked at the prices of especially the junior gold miners. They are not reflecting that at all. I think this sector had higher prices when gold was at 1350. We know that inflation, etc., has been going up. That's squeezing margins. That's for sure. Still, major miners haven't performed that bad, and they're not really cheap even, I would say. I don't like, typically, I mean, there are some, I think, more base metal plays like Tech, for example, which is a large diversified miner. That looks actually cheap, but I don't think a lot of the senior producers in gold are particularly cheap. That's why I, almost never like the risk reward in those, even though yes, they do tend to follow price of gold. And right now, for example, they've done quite well, and they are even trading at quite the premium to juniors. They're not even cheap, and I don't like that. But it doesn't mean they can't go higher, of course. But it's like, you wouldn't believe. I mean, everybody is still bitching, possibly understandably so, about the performers in especially junior miners, because they're not reflecting this at all, obviously. So it's like, yeah, you're right. I mean, I remember back here, it's like everybody was saying this was a breakdown, and I'm like, yeah, probably a fake out. I'm not gonna sell something cheap just because gold looks to be breaking down on some chart and everybody agrees that it's absolutely crap. And you can see the movement, after that, almost straight up. So it's like, I wouldn't be surprised if we get a correction sometime soon. I have no idea. It might go to a new all-time high before it corrects. I, again, have no idea. My focus is, if I am owning something that is overvalued, that should be a sell, regardless of how any chart looks. If especially gold chart or market chart, whatever. Even if it's tied to the gold business, and that's why I certainly didn't sell anything here. Everything was even cheaper than it is now. I didn't know that it was going. I didn't know for sure it was going to go like this. But as long as something's undervalued, the only play is, I mean, how do you make money when something is cheap? It's to hold it until it is not cheap, because the fair value is going to act like a magnet, and it might take months or years even. But that's the only way you play it. If you buy something, or if something is extremely cheap and you trade that, that is missing the whole point. Why? I mean, the whole point of something being significantly undervalued is that the risks are to the upside over the longer term by default. It's a one-way trade. So I don't understand why one would actually actively trade that, because it's like missing the whole point. Anyways, like, look at silver. This is the hourly chart of silver. It's like predictably chaotic. I posted a chart when we were down here. It's like, same thing is gonna happen. People are freaking out, and sure, they were freaking out, and then all of a sudden up. I mean, just I don't know. I mean, there's some people who are like, here, they're talking about, not some people, majority of people. Every time we hit, get momentum. That's the thing, momentum higher. Then it's the next target price is always higher. Down here, target prices were probably, we're going to see $18 again. And then we're at 24. So it's like, imagine just the swing, expectations versus what actually happens. Like, maybe here somebody's expectation is, better sell now because we broke down, let's say, and we're going to go to 18. Within a day or something, it was up at 24. $6 from your, quote, target price. And tomorrow it might go down. Because if there's, again, anything, this is like Pong. The pattern here, even though it looks super chaotic, is that it goes up and down. So if I had to guess, if silver is up today, I would guess it's going to go down tomorrow. And if it's down tomorrow, I would guess it's going to go up the next day. But imagine using silver price as some kind of due diligence tool in your, in terms of, buying and selling juniors. How on earth can you have some kind of strategy in this kind of noise? But if you're just, hey, something is cheap, I'll hold it as long as it takes until it's not cheap, or the case, has gone south and it by default then is not cheap perhaps, you wouldn't care about any of this. The prices would fluctuate with the silver price, but the cases doesn't fluctuate like this. I mean, many companies, maybe they haven't released any news over the last 2 weeks. Maybe they've created a lot of value that's not been reported yet. But let's say it's down, a stock is down 10% because silver is down. And then you get the news release and it's like, oh, okay, it's actually good. And then on another point, I know we've seen companies release good news, like Montage Gold, and there's really no reaction. People complain, people are frustrated. The idea with that is like, for, again, in a poor sentiment environment, and we're still in a poor sentiment environment where many juniors are cheap. I don't know how many juniors I would like to buy more of. It's like every company I look at almost that's above average quality is like, I would like to own more of that. I would like to own more of that. It's like I have way more good cases than I have money to put in. And I'm always full invested. So it's kind of frustrating, but it's a luxury problem, obviously. But anyway, the thing is then that, okay, if value obviously goes up. Something positive happens. Positive news release. They made some discovery, or they expanded a resource, something like that. Value obviously goes up for the company. That project is suddenly more valuable, and price does not respond. It's frustrating, of course, for a holder, but this is the best environment ever for a buyer, because like I tweeted a day or so ago, when you're a buyer, or let's say you're bullish, in a low sentiment environment, basically a bear market, the bottom of a bear market, let's say, or actually the start of perhaps a bull market, whatever. Like stuff is cheap, nobody wants to buy anything. It's like investing as an insider. Because why is, let's say you have inside information, something good happening. The whole idea why that is, quote, profitable is obviously that, hey, I can buy a security in the market before everyone else knows that this project is actually more valuable now, because that information about it going up in value has not hit the market yet. Nobody can price that in because nobody knows. So you, in that case, let's say you do buy on that, and then the next day the good news comes and the stock opens up, market reprices the company to reflect parts, at least, of said value addition. So if the company goes up in value, the price of buying the company should go up in value. Pretty logical. But as we've seen nowadays, a lot of times the reactions to positive news is very muted. So let's just say that stock price has gone nowhere in a week, then some positive news comes, and nobody really wants to buy. Nobody got in Mr. Market's eyes. Now, don't care, not willing to pay a cent more. But it's obvious that the value went up. Sure, for a holder, that's kind of frustrating, because if in case that the news would have been bad, let's say, if they drilled and they missed, the stock would probably go down. So at times like this, for a holder, it's extremely frustrating, because we're not getting paid yet when we're, let's say, smarter than the market, because we know that this company is worth much more than what Mr. Market is paying. And even if we are in the fortunate position that one of our current holdings release good news, not bad news, but good news, and it doesn't react, we don't even get paid for it immediately. Someday that will be reflected, but we don't get the immediate gratification. But we took the risk of the news actually being poor instead. But that obviously opens up an opportunity, because all of a sudden this company is worth even more. So if it was cheap before the good news, now it's even cheaper. So if you had, let's say, 1% position in a case you thought was cheap, and the value of the company went up 20%, and price didn't react, maybe you should double that position, because the market didn't care. I mean, that's really how cases can change, how much they can change. So again, it's frustrating for a holder, but as a buyer, this is like almost investing with inside information, when the market simply doesn't care. Nobody's listening. Nobody is reading the news releases, let's say, or nobody has money to do anything. And for someone who's fully invested like me, one would think like, okay, but you can't, it's wasted because you're fully invested all the time. No, it's not wasted. I'm a value shuffler. So if I, again, own 10 companies, 10% in each, we're in a bear market. I love all the 10 companies equally much. I think they're equally undervalued, thus the 10% in each. And all of a sudden, some company releases good news, which makes the actual value go up 20%. And let's say it's already 100% undervalued to start with. So it's like, let's say it's trading at 50 million market cap. You think the fair value is 100 million, which it will reach someday. Then that value jumps by 20%. That's 20 million, so it goes up to 120 million. So now I have a price to value gap of 70 million instead of 50 million. Maybe I'll sell some of the other 9 and put into the new company. The value, the face value of the portfolio doesn't change. I just shuffled around. I sold something to buy something else. The value of the price of the portfolio was unchanged, but the future expected returns of the portfolio went up because I have now more invested in one of the 10 stocks that has higher expected returns. So again, in the now, nothing changed. Over the longer term, I just boosted my portfolio performance. In 1 year, it's probably going to be up even more. Even though today, when I did the actual transactions, nothing happened. I didn't get paid anything for it. I just grabbed an opportunity and used the currency, which is in this case was selling shares of another company, to buy the better opportunity. That's typically why my portfolio has heavy corrections, because I never market time. When we go into these bear markets, I go down 20%, up to 50%, sometimes more. But going out of the bottoms, I'm always 100% invested from whenever the bottom tick is. And you know that, I mean, nowadays I haven't needed to do any copium videos. But I churned out almost a video every other day, just pointing. I'm not gonna guess when the bottom is in. And now in hindsight, a lot of juniors are up. Not all. Some juniors are up barely anything. Some are at 52 weeks highs, low still. Some are up 200%. Some are up 300%. It's like you never know. Some juniors bottomed in July. Some juniors bottomed 2 months ago. You never know. That's why I don't try to guess it. If it's not actionable, if it's unknowable, it's worthless. It's like, what's the worst thing that could happen? It's like, from a game theory perspective, the worst thing, well, my undervalued companies, which will go up one day, just go down more first. And again, if you do this, let's say value shuffling, it means that when the actual bottom is in, hopefully you will have reshuffled into the cheapest place, the ones that went down the most without any good reason. So when the upturn comes, when we actually bottom, and we never know when that is, we know that in hindsight, my rallies are typically way more than 100%, at least to the next sentiment top, and we're not even close to a sentiment top. Anyway, so basically this is noise. Everything here is noise. I don't care where gold is going. If it's going to go, everybody else cares. The market cares. But it's like, I'll go through that a bit later. Anyway, let's look at some news. Western Alaska announces expansion of exploration and administrative team and granting of options. Well, yeah, you can read this yourselves. Pretty, I mean, the resume, the Tintic mine, that's one of the very large CRD systems that are in the presentation. Here we got Magna Mining, Red Dog, Pogo, Fort Knox, Greens Creek. I mean, project man for Niblack VMS, Alaska. I mean, it's not. Yeah, I mean, if you look at some of these, the experience of some of these folks here, Kennecott, Greens Creek, Tech Cominco, Senior Exploration. obviously competent people. I mean, they would probably not be attracted to Western Alaska if this wasn't a really good case. I mean, this is for sure one of my favorite high octane growth cases, where it's like, hey, I don't know if I had to bet. I think we're gonna be up in a year or two. And I mean, again, this is the Tintic Utah system. I mean, it's one of the most straightforward cases there is. It's like, yeah, okay, I think they have like 45 million ounces of bonanza grade silver equivalent, something like that, which could probably be profitably be mined in any environment. Low tonnage operation, so it's good against inflation, etc., because it won't be huge throughput, yada yada yada. Basically hitting bonanza stuff in. Don't they have the where the actual assays thickness? Here. All assays received to date. They don't even do the AG equivalent, but you can calculate these yourselves, like 800 to 1 or 500 over incredible widths up to like 1.2 thousand AG equivalent grams per ton. So like, yeah, this is obviously a chronically high-grade system so far. It's not that they have had a few hits and a few misses, etc. And these can, where is the Tintic? These can be absolutely enormous. This is the same scale. Maybe they drilled up, where's the scale bar here? This is, yeah, they drilled up like 450. They drilled about this much. It's like, look at some of these trends here. Obviously what you can see here is like, yeah, if you find one of the CRD snakes, it tends to go on. That's the beauty of these. So this, what I like about Western Alaska is like the grades, first of all, obscene grades, some obscene widths as well, especially in the, let's say, pipes or feeder zones. This could be growing, in 5-10 years. And as if you look at Ivanhoe Electric's presentation, they actually own the Tintic area now, and they're looking for a big porphyry depth. So basically, there's an Ivanhoe Electric kind of target after all the CRD was mined. So you can just imagine, it's like, if we're talking, a company maker, if you get one of these big CRD systems, this might be mined for decades. I'm saying. And it's pretty damn cheap. And now I think people are expecting a placement, and that's why it's subdued. So again, it's like, what is your case? If you buy Western Alaska because you think it's going to be up tomorrow or next week or whatever, I mean, it's been very volatile just over the last month. I mean, okay, how much is this? Yeah, 57% run. I mean, it's very liquid. Down 30%. Big swings. And recently we went up again like 53% and then down maybe 24%, something like that. So it's like, in the short term, this can lead to a lot of regrets. Like, why didn't I sell? It was up 53% in a short time period. Oh, and then it went down 24%. So basically, you have not the gains, but the gains get taken away from you, etc., etc. But it's like incredibly hard. I think this is cheap. It's incredibly hard to know where it's gonna trade, and I think now it's a bit subdued again because some who want to get in bulk, meaning in a private placement, they might have some incentive to not let the price go up. That's typically what happens. But it's the case like, yeah, I'm buying or owning Western Alaska because I think it's gonna be up tomorrow or next week. Like, I have no idea. But it's like, what is the case? I mean, the most obvious case I would say is that given the management team, given the enormous skin in the game they have, etc., given what we know about the system, given all the hits we've seen so far, it's like this could probably grow a lot. So basically, in that case, it's like, yeah, if we end up having a Silvercrest tape deposit, that's like 100 million ounces AG equivalent of Bonanza grade stuff. That's like over $1 billion worth. I think the market cap right now is like 140 or something, 130. Maybe it could be way more than that, because we might get a Silvercrest deposit from this slice here, something like that. Who knows? It could be absolutely enormous. I mean, it's still obviously wide open. So it's one of those cases like, I mean, to make it really simple, if this just keeps on growing, it's gonna be a multi-bagger over the next 2 years. And in the meantime, we'll have 50% rallies and 40% corrections, 50% rallies, 40% corrections, all the way up. And everybody always tries to trade every movement, etc. But it's like in every great success story, like Bear Creek, etc. You would have a 10 to 20 bagger if you just held the stock for like 3 years after the actual discovery. And there were up to 60% corrections along the way. And only, I am pretty sure that the hodlers made more money in Great Bear than any trader. And if you're a hodler and also buy every correction in Great Bear, for example, you would have made even more money. As long as the case is intact and it just gets cheaper, that means opportunity is better. So by definition, one would, let's say, add some shares. Anyway, so that's the simple stuff. It's just so mind-numbingly boring because everybody has a time frame of, or we typically have a time frame of, next week. And like I told someone recently, it's like, and what I said earlier, everybody's biggest fear is that share prices might go down tomorrow. That is the biggest fear, and everybody has a time frame. It's like I expect all companies to go up every day. It's like you can see bitching starting as soon as a company is off its all-time highs even. That is how outrageous. I mean, there was already bitching here after this move, let's say. I'd probably bet on that. It's like, okay, but what if this just went straight up? That means that the compounded annual growth rate would be, we would basically be at $250 a share in, how long is that? 2 months later. Of course it's not going to go up like that. But it doesn't matter. What is this compounding here? Yes, again, it's like huge rallies, huge corrections, but now it's still up 400%, for example. So let's say it goes to Silvercrest in like 1-2 years. Who knows? Maybe at least 500%. I mean, so like, do you know how good those results are? So I guess the point is that if you think about, anytime you think about the short term, you get either bullish or bearish, depending on what the stock is doing that day or silver is doing that day. If everything is up, you'll have a bullish sensation. If everything is down, you'll have a bearish sensation. But if you just focus on like, what am I paying today? What do I think this company is going to be in 2 years, 3 years, 4 years? I mean, typically if it has a long pipeline of growth, the longer you draw out the timeline, assuming it's a competent team, the bigger the price becomes. So that makes it much easier to hodl and keep conviction. If you always live in the future with any one of your cases, that you have a fix, like, my base case, which I will treat as a certainty, is that, this company will have this amount of ounces in 2 years. So I'm bullish because I'm looking at the price today, exactly now, and what it's going to be trading in at exactly 2 years. That should give you all the greed required to stick it out, and even, you know, optimally buy more the farther it is from that future, meaning the lower it is in the short term, cheaper. Alpha expiration price update. I'm very intrigued by Aburna especially. I think this could turn out to be a major gold discovery. They have the team. They found elephants before in this part of Africa, and these early results are way above normal, abnormal. They've only drilled 5,200 meters, and they've hit really good. I mean, this is way over 100 gram meter intercept. So according to the Kennerland study, this is incredibly bullish to have this kind of results this early on. They are also looking to raise money soon, I think. It's a very liquid stock. So again, I mean, in my opinion, Alpha shouldn't be this cheap. Western Alaska shouldn't be this cheap. Why are they cheap? Firstly, sentiment. Secondly, people are waiting for the private placement. Again, that's like in the big scheme of things, that's a detail. That is a detail. But a lot of people will, again, it's like they only want to be in a stock if they can almost guarantee that it's going to go up the next week. That is when they are comfortable owning it. If there's and we saw that in Magna Mining as well. It's like, yeah, okay, there might be free trading shares, a lot of free trading shares. I can't own a company which has downside risk in the short term. Yeah, but okay, is that the case? It's like you're giving away one, or you're selling ownership in one of the cheapest companies, in my opinion, in the entire sector because you think there's price risk to the downside. So obviously in that case, like, why are you even talking about the long-term value if you're just a short-term price speculator? That's it. That is it. You can't be, I mean, I don't know how often I see people say, yeah, I'm bullish long-term, but in the short term, yada, yada, yada. Again, everybody's main occupation is guessing where price is going to go in the short term. And we should be bullish, you know, the longer ahead we can look than the market, the better. And again, with growth pipelines, it's like if you can see a company grow for 5 to 10 years forward, and it's already cheap today, it's like, hey, if in theory in that case, it's like, I'm going to throw away the key, come back in 5 years, and either this, let's say the company will be worth 0, or maybe my base case is a reality and I'll be up 1000%. So if you had a 10% position, let's say in that stock, it would have paid for everything else going to 0. But everybody squanders that. Everybody tries to predict every short-term move. That's why it's like the hodl portfolios I manage, they are not the fastest runners, etc., but they are chugging along. They are, in my opinion, all those companies are cheap or have incredible growth prospects. So I expect the trend to be up. And in the meantime, that can go, any stock there can go up 10% or down 10% every day, or have months of correction, etc. And then again, if something gets too cheap and I still like it, maybe I'll sell something. So I'm always kind of, you know, semi-producing even more returns simply by taking advantage of the volatility. Yeah, Western Alaska Headwater Gold defines multiple high priority drill targets at the Midas North project, Nevada. I mean, this is also like super cheap. I mean, for an early stage explorer, 10 projects or something, 11 projects I think, or even more. They have 2 earnings with Newcrest, which is a major gold company, on 4 of the projects. So it's like, what does that say about how good this team is? And they've basically made discoveries immediately at like, what's it called? Spring Peak, I think. Yeah, I mean, again, it's like they have they have 11 targets. They've already kind of made, discoveries or hit what could be seen as discovery holes at a couple of them. So again, the case, let's say you can go in a time machine, come back in 2 years. Do you think Headwater Gold will be valued less than what is it valued right now? Maybe 18 million Canadian or more. It's like, if it's more, it's probably a lot more. So again, or maybe 2-3 years. Maybe it's a 10 bagger in 2-3 years. In the meantime, it can go anyway. But the risks are to the upside. And that's why you hold cheap companies. You hold cheap companies, as long as the risks are to the upside, one day they might get revalued and even expensive, then you sell. So it's like, there's absolutely nothing really to do than to just sit in cheap companies, especially if they have a long runway for growth. Because in that case, we should assume that there's a good possibility that the company will be worth more in a year, even more in 2 years, even more in 3 years. But it's just, no, it's so stupidly simple that it's also incredibly boring, and that's why almost nobody does that. Almost everyone becomes a trader and chase everybody chases 100% returns within the next 3 months. That's typically it. And typically that means they're taking enormous risk. They're taking a bunch of if risk. If this catalyst happens, if they drill like this, not the when type situation that, hey, I just have to wait for the market to figure out just how cheap this is for the masses to come back. Anyway, it's like, it's absolutely ridiculous. I mean, if this market was so hard, it wouldn't be so cheap. The good juniors shouldn't be this cheap if this market is so hard, because the risks are so exaggerated to the upside. And again, it's like, if blue sky materializes, for example, let's say Western Alaska is onto a major CRD system, like multi-billion potential. If that turns out to be the case, that will not be known until 3 years later, let's say. So the only way to capture that, growth is to hold it for 3 years. And hold it through 60 news releases. And as long as they have growth prospects ahead, etc., and it's not super expensive or overvalued, basically then it remains a hold. Because yes, let's say the more they prove up, share price goes up, and yes, the marginal growth rate is going to taper off, like we see in Great Bear, whatever, because it's easier to grow from 1 to 2 million ounces in the case of gold than from 6 million to 12 million ounces. Sure, that's true. But at some point, first of all, it reaches, let's say it reaches the threshold from becoming a tier 3 to a tier 2 project. That's an immediate value boost. A premium is going to be put on that. If it goes from a tier 2 to tier 1, the ounces are probably going to be worth even more. And as these companies get de-risked, yes, let's say after Great Bear went up 1,000%, and let's say it just had a double left after that, one could say, the big gains have already been made, etc. Why be in this, yada yada. And let's say you let the position run, and you're up 1,000%. Like, sure, it makes sense to probably take some profits off the table, but it's like, yeah, you're trading you're trading away upside because it's gone up already, but it's much more de-risked. So your downside is a lot more protected. It's probably not going to go to zero if it's gone up 1,000%, because that should mean that the project is already so good that somebody's going to buy it, or it's going to have some value, etc. So yes, you get less torque to the upside, but you get paid by the project getting the risk. So you sacrifice explosive upside for more margin of safety. Then we have Magna. Magna Mining closes 18 million private placement, flow through shares and common shares. And we know, I mean, there's been a bunch of, again, scaremongering that, hey, you better sell out because free shares trade. There's free shares. There's shares becoming free trading in what is that, 2 days or something. And there were millions of shares in the private placement, and everybody just assumes, hey, again, if you're up 200%, of course they're gonna take profits. As we learned here, Dundee, which was, I think, the largest investor in the previous placement, which was done at I think they're up 300%. They added. Not only did they not sell, and that's been my argument, who the hell would be dumb enough to just sell because you're up if it's still one of the absolute best cases around? That is just, in my opinion, incredibly stupid. I own more shares in Magna Mining today than I owned when it was at 50 cents. Ideally, I would have even more back then, obviously, than now. But it's you get more and more comfortable with the story, you start to appreciate, and then you see obviously what kind of asset results they can pull out of the Green Hill asset. So it's I like the case even more. I'm more comfortable with it, etc. Why on earth would I, hey, I'm up, let's say you're up 200%, so I'll sell out the entire position. Why? No, simply because I made money. Who cares how much money you have made? The only thing, we are supposed to live in the future. The only thing is how much money is there, left to make. I mean, it absolutely makes no sense to, in my opinion, to sell something just because you're up on it. I mean, yes, if we're talking from a risk management perspective, sure. I mean, take profits, take money off the table, etc. If it helps you sleep better and you don't want to be too exposed to one story, sure. But just, all else equal, just taking profits because you have them is it's one of the most moronic things I've ever heard. And it's just look at these guys, Dundee. They're increasing their stake. They're averaging up. Not only has their previous position obviously gone up a lot in value, so they already have a lot more exposure in absolute terms, money terms. They're even adding to that. And they sent out a mail also, welcoming 2 new major shareholders. I don't think we still know who these new shareholders are, but it's I would assume it's smart money. So it's I love Magna, and I've gotten a few, congratulations, you were in early, yada yada. It's congrats, for what? Yeah, okay, we're sitting at a, it's up, it's up quite a bit, sure, but it's almost congratulations, yeah, okay, hey, you got it, you got your, let's say 100-200% return. It's great. Hey, I think we're just getting started. And if you listen to Jason Jessup, I mean, he basically says the same thing. In his opinion, or I mean, according to him, he won't sell a single share until Magna is at $1 billion market cap. We're at 200 million, or not even that, and we have a lot of money. So it's again, it's if you, if you are in the habit, like everyone else, to always try to guess where a stock is going, it's like, who cares if, I mean, if Jason says like, yeah, we're gonna, this is easily gonna be worth 1 billion. It's like, is it more important to try to catch every single up or down move, or is the actual signal one should be paying attention to one of the largest shareholders, which happens to be the CEO, who says that, yeah, I'm pretty sure we're at least going to get this to $1 billion. What is the important thing here? What is the price you're after? Is it to make a trade and get 20%? Or is it like, hey, I'm going to ride with a pretty big position because it's so cheap? And I mean, hey, if I flip a coin, either, Jason is correct and he'll get it to 1 billion and I'll make a lot of money, or it won't go that way. So let's say you have a 5% position and you're like, I'm gonna sell if it goes to 1 billion, or I'm never gonna sell. There are only two options in that scenario. Either it never goes to 1 billion and let's say we assume it goes to zero, or it goes to 1 billion and you'll have, 5x your money. That would be pretty good risk reward, I think, especially since the likelihood of it going to zero looks pretty low. I mean, from that perspective, it's kind of a really easy case. But if you're like everyone else trying to guess every short-term movement, you're gonna waste all the opportunities. District Metals comments on recent media reports to lift the uranium moratorium in Sweden. So again, they have applied DMX license application for 76% of the Viken deposit, which has, well, it's a huge resource. And apparently the Swedish government is going to vote in March. And you can see the polymetallic Viken deposit amongst the largest by total historic mineral resources of vanadium uranium in the world. Apparently, I think this is the second largest uranium deposit in the entire world. And it has vanadium, nickel, it has a bunch of stuff, zinc. So it's like, apparently also, or allegedly, the previous owner topped out at around 330 million in market cap based on the Viken deposit alone. I think uranium was a lot higher back then. But I think it was over maybe $100, and I think now it's like 50. So it's like an enormous option play. It's like, hey, okay, let's say uranium goes to, $100 or whatever, 140 per pound. I don't even know what it's actually priced in. And that the previous operator, Mr. Market, the market figured, hey, they're worth 330 million at that point. This project, they own 76% of it. I mean, it's pretty easy bet. I mean, I'm in District Metals for their base metal projects, and I bought, near the lows recently because I thought it was just so incredibly cheap, just based on their base metal projects. Given the team, I mean, Garrett Ainsworth is the CEO. He's one of the key people in the next gen success, which is I guess the most well-known uranium exploration success in the last 10 years. Next gen now has a market cap of 3 billion. So it's like that guy knows uranium. The CEO of District Metals became a rock star in uranium. So it's not like he's some random average gold junior CEO who just happens to, uranium looks hot. No, he's he's legit. He's an expert on uranium. Let's just put it like that. So it's like, what is this worth? If March comes, the moratorium on uranium mining is lifted in Sweden. What is this worth? 76%. We get the application. I have no idea. We just know that at higher uranium prices, that the company that only had the Viken deposit was valued at 330 million, and I think District Metals has a market cap of 15 million today. So let's say the base metal projects are at least worth 10 million in fair value, at least 10 million. And I think that's way too cheap as well. But let's just be conservative, 10 million. So 5 million is priced in for the Viken deposit. And from a fair value perspective, again, I really don't know. What is the second largest uranium deposit worth? The second largest in the world? I don't know. Could the market care if uranium, does what all the uranium bulls think, with the, opening of new reactors and etc. Let's say uranium doubles, or the next year. And we have this project and the moratorium is lifted in March. Who knows how high District Metals could run just on that deposit. So it's like a super beta option in, beta leverage in District Metals, and it's already cheap. So it's like, in my opinion, free leverage on the second largest uranium deposit in the world. And if the moratorium is lifted, obviously it should be worth more than if they can't even mine the uranium, even though there's a bunch of other metals. It's like, what we know is that it's absolutely enormous and it's worth something. And if March comes and they lift the moratorium, that means that the second largest uranium deposit in the world is all of a sudden at least legal to mine. One would think that has some effect on the implied value, given you can't even mine it before March, and perhaps after March you can actually mine it. Anyway, it's going to be super interesting to see where this could go, actually. Again, if uranium heats up and it's like, hey, I'll take 100 million market cap any day, that would be X amount of baggers from here. Irving Resources commencement of 2023 exploration campaign. You can read this yourselves as well. They brought in Chilean drillers, so Irving, which has had a lot of problems with the COVID situation in Japan, seems to be fixing that now. Testing multiple new drill targets and vein extensions at the OMI site. And let's just fast forward to the comments here. We're getting everything in place to pursue exploration more aggressively, commented Dr. Quinton Henney. We're delighted to secure a team of Chilean drillers to join our growing Japanese drill crew. We expect to be able to pursue year-round drilling as we move forward. This year we will test all 4 mineralized systems at our OMU project, and by late year we hope to be drilling at Yamagano. Things are shaping up nicely for Irving to pursue its ambition of making next great gold discovery in Sweden. So we know Sumitomo and Newmont is in, so we know there's a large exploration potential. The problem has been that they haven't been really able to go after the exploration potential, because they haven't really been able to drill, because they haven't had any drill crews. That appears to be changing. So whatever value is buried there in Japan, we're gonna get a lot quicker answers for that, or on that. So this might be an exciting year for Irving. Line 1 intersects, more high-grade stuff, 13 grams, 10, 15, 17, 12, 9, including Bonanza, including 14 point, yada yada. You can read this as well. It's like, they are just doing a financing. I think it actually just closed, and they are they are going towards production, and obviously they're drilling as well. So this year might also be quite exciting for line 1 if we also get that, ramp up to production, which tend to happen. Let's say we expect first pour in, I don't know, year end or whatever. The closer we get to that, the closer we get to being having a producer premium, and people will start to front run that, yada yada yada. So like our job is always, okay, can we predict how people will act in 6 months before they even know that? Okay, then there might be an opportunity there. We trade like, yeah, I'll wait for 6 months, but I'll get a, let's say a probable 50% return at least. Defense Metal announces best rare earth assay results of 2022 from the Cheetah project drilling, including 138 meters of 3.66 trio, whatever that means. I'm not an expert on rare earths, but apparently this is a very good hole, and we've seen John Robbins get involved. So this is one of the few. This is the only rare earth play I own. And if John Robbins is in there, it has a market cap of some 60 million. Obviously, the strategic mineral stuff is heating up, yada yada yada. So I don't think it's a stretch to say that Defense Metals is probably very cheap, and one could possibly expect that to be, acquired or something, or even get a, I don't know, government grant perhaps, and they could actually try to get this in production themselves. I'm not 100% sure on that. What I am pretty sure of is that I think Defense Metals is very cheap for the position they are in, with having one of the, best and most advanced rare earth projects in Canada. Yeah, I think that's about it. I'll cover some more stuff later on. Thank you for listening. As always, consider me biased. I own shares of all companies mentioned, well, the ones that are trading at least. I don't own shares of Great Bear. Always do your own due diligence. Think for yourselves. Know why you buy or sell. You should literally write that down so you know why you bought a stock in the first place. And it's like a tip would be, it's like if you have an Excel sheet or something with your portfolio, and you have the names, you should write down your long-term reasons why you bought it and hold it. It's like, okay, even if it's just as vague as like 2 years from now they could be worth $1 billion. That should keep you in the game. That should, that would get you greedy when you should be, because the more price goes down without any reason, you'll just see, hey, Jesus, I can buy this amount now for 10% less. That is how you that is how you are able to actually buy low. That's knowing, reminding yourself why you bought it in the first place. And if nothing has changed, and you see some of these juniors, they're actually becoming better and better and better, but price is not responding. That is a very good thing. So if you like the company before that, they release some good news, yada yada yada, stock doesn't really move, obviously you would buy more, because the case just got better while the market didn't care. It looks even more probable that it will reach your long-term vision, let's say. But just be prepared to absolutely do nothing but sit on your ass and expect like 30% rallies, 50% rallies, 30% declines, whatever. But if you hold that for 2 years, as long as the story is intact, you're probably gonna make quite a bit of money. That's it. It's no hocus pocus. You don't need to guess every short-term movement. Everybody else does that, so you just use that fact. So when everybody's, when something is down, more people want to sell, so you buy that from them, because they're not looking at where this is going to be in 2 years, because nobody is, except you. It's like, yeah, you'll beat them. You'll use the traders. Yeah, thanks for listening. Bye-bye. Yeah, not investing advice. Bye.